Hi there, this is Nishant Segunath welcoming you to a new video in my lessons for direct tax, and in this part we'll be learning about computation of tax liability. So let me give you a briefing on what this topic is about. So with all the lessons that we learned till the previous one, what we studied was on understanding what all are different kinds of incomes, understanding the treatment of different kinds of incomes, how they are grouped under different heads, what all are the deductions that are available to an assessee under each of those heads. After those deductions, what all are additional provisions such as clubbing, carry forward and set off that has to be carried along with while computing income under those heads. And finally, after that, we saw a section wherein we saw general deductions under chapter 6A, deductions under section 80C to 80U. So again summarizing, we saw 5 heads wherein we understood how to group incomes within those heads along with various clubbing and carry forward set of provisions. We call the total at that stage as aggregate income, and after aggregation we saw an item, a general item of deduction from chapter 6A, 80C to 80U, and after that deduction we understood that we get total taxable income. So from aggregate income, after the adjustment for deductions, we get total taxable income. It's not always necessary to call it as total taxable income. At times it will be called as total income, or at times it might be called as taxable income or as total taxable income. And as the name suggests, an assessee's tax is assessed. An assessee's tax is computed on the basis of this income. And in this study, we'll be learning on how to use this income and apply provisions pertaining to tax computations on this income and find out the tax payable. Alright, so we'll be learning about various elements that come into play while we understand the concept of tax payable. Right, so let's get into the study. So these are all the different components that comes into play here. First and foremost, tax rates. So we use these tax rates to find out the basic tax payable. We apply this tax rate on the total income. Then comes an item of rebate, which is only applicable for resident individuals. Then surcharge, marginal relief, health and education cess. All of this will be discussed very much in detail in this part of the study. So before going into all these individual contents, let me give you the briefing which I gave you previously in a bit more detailed manner, wherein I'll explain the concepts of each of these items individually in a very brief manner. So let's check what the whole process is about. So herein we'll be checking out the different steps that come into play while computing tax payable. This you should be knowing by now. Everything we have discussed till our last lesson. All the 5 heads we aggregated, clubbing and set off and carry forward. Just so that you know, I've arranged clubbing and set off and carry forward here because the sections come in this order. As I've told you previously, it's not actually after aggregation we do clubbing and set off and carry forward. So all the clubbing provisions and set off and carry forward will be conducted with the respective heads during the process of aggregation. Right? If at all you have any doubts pertaining to that, just let me know. Use the chat box or the message box or Q&A window. I am more than happy to help you. I'll give you whatever clarifications that you require. Okay. Then after that we have deductions, and then we get taxable income or total income. And it's on this taxable income or total income we apply the various rates. So the first thing that we apply is our tax rate to find out the basic tax payable. So tax liability based on slab rates. Alright, slab rates is only for individuals and few other assessees. For corporate assessees, it's not slab rates, it's a different methodology. Alright, so for certain assessees and individuals, it's slab rates. But for corporate assessees and firms and all, it's flat rates. No slab, only flat. Fixed rates. So with this tax rate, we calculate the basic tax payable. Now, if the assessee is an individual and if the assessee's income does not exceed rupees 5 lakhs, by individual I mean resident individual. Okay, it's not just a normal individual, a resident individual. So if an assessee is a resident individual whose income does not exceed rupees 5 lakhs, that assessee is eligible for a rebate under section 87A. You will understand what this rebate is once we get into this section, this part of the study wherein we are discussing rebate in detail. So step 1 and 2 done. We found out basic tax payable. Next we found out the rebate, if any, applicable for that assessee. So rebate is an item of deduction. Alright. So rebate, by the name you should be knowing, right? When we hear about rebate, sale, rebate, things going for rebate and all, what it means is things are going for a discounted price. So rebate is a kind of a discount the assessee is given by the income tax authorities, so that he can discount the amount of tax he has to pay. Got it? Right. After rebate comes another item of tax payable, and another item of not tax payable, another item which is payable by the assessee which comes in tax payable, and that is surcharge. Now surcharge is charged based on different tiers. By tiers, what I mean is certain range of income on which surcharge is applied. So for example, an assessee has an income which is above 5 lakhs but below 1 crore. If he is an individual, he will pay surcharge at 10%. If the same assessee has income above 1 crore, below 2 crore, the assessee will pay surcharge at 15%. So the rates change based on these tiers. By tiers, what I mean is a range. So 50 lakh to 1 crore, 1 crore to 2 lakh, 2 crore to 5 crore. So it goes like this. Alright, that's what I mean by tiers. Don't worry, we have a detailed study on that following this introduction. So surcharge is again an item which is payable by the assessee. Now for paying surcharge, the Income Tax Act gives a discount there as well. So for basic tax, the discount was rebate, and that is only for resident individuals. And for surcharge, a discount is available in the form of marginal relief. Now that is applicable for every kind of assessee. So marginal relief is a kind of discount given by the Income Tax Act to assessees while computing tax payable with surcharge. Okay, so understood what marginal relief is? Now finally, after computing marginal relief, we will have an amount of tax, right? We found basic tax, we found surcharge, and we applied any discount applicable under marginal relief. We will have an amount of tax payable, right? On that tax payable, we pay cess. Cess is charged at 4% on tax plus surcharge. Just so that you know, this base tax computation, that is this tax liability, is applied on total income. Surcharge is not applied on total income. Say surcharge is 10%. That doesn't mean surcharge is 10% of total income. It means surcharge is 10% of basic tax. When we say cess is 4%, what it means is cess is 4% of tax plus surcharge after marginal relief, not 4% of income. Okay, it's 4% of tax payable after marginal relief. Got it? So what you saw right here is the general steps while computing the tax payable for an assessee. Now let's get straight into all these 5 items, starting off with tax liability based on slab rates for individuals in the next video. See you there.